Good afternoon and welcome to today's presentation, Legal Properties of Economic Damages. In today's webinar, Mr. Willoughby will discuss critical documents to ask for, earnings versus earning capacity, pre- and post-injury earnings, work, life, and personal maintenance, and life care costs. To give you a little background about our presenter, Jeffrey Willoughby, he is Director of Forensic Resolutions Incorporated, and prior to joining the firm, he was a supervisor for the regional public accounting firm. He spent the previous 13 years with firms in Delaware and North Carolina. During this period, he provided auditing, tax, accounting, and consulting services to a wide variety of entities. Mr. Willoughby has also provided testimony as an expert witness. Attendees who require a passcode, the word for today is damages. During the Q&A session, we will ask that you enter this passcode into the Q&A widget for CLE reporting purposes. The Q&A is located to the left of your screen. Please remember that if you are applying for CLE credit, you must log onto your computer as yourself and stay for the full 60 minutes. You are also required to complete the survey at the end of the program. Please note that CLE credit cannot be given to those watching together on a single computer. Tomorrow morning, we will send out an email with a link to the archive recording of the webinar. The slides can be downloaded from the resource list to the left of your screen. Thank you all for attending today, and Jeffrey, the presentation is now turned over to you.
All right, thank you, Emily. Thank you, everyone, for logging in today. As was said, my name is Jeff Willoughby. I'm a director with Forensic Resolutions. I've been so for about 9 years now, a little over 9 years, and we are a boutique firm that specializes in forensic accounting and economic damage issues. This is a majority of our practice, so we work with these issues on a day-to-day basis, and the intention is not to give you everything related to economic damages, but to give you a good bit of insight into what we see as some of the important issues when you're dealing with an economic damage claim. And help you in your own practices. So without further ado, let's get started. Most of what we're going to talk about today is personal injury and wrongful death type damages. This is a substantial portion of our practice, and this could involve medical malpractice, could involve some sort of a work-related accident, some sort of a motor vehicle accident, or house fire, building fire, that kind of thing. Anyone where anyone is injured or unfortunately killed, and there is a loss of wages claimed for either the person or that person's estate. Along with that, sometimes we see with these claims for household services. These claims are usually from the family members and the estate for the services that person would have provided or could have provided before any accident or injury occurred. Along with injuries, we often see life care costs, and I'll preface this part of it by saying we're not life care experts. We usually have a life care planner that provides a life care plan analysis, and from that we project the future value and then the present value of any life care costs, and depending on jurisdiction, how those are presented, at least where we operate in New Jersey and Pennsylvania primarily, there are some differences in how those damages are presented. And then to a lesser extent, we'll talk about these a little bit, but they're not. These are a little bit more difficult to demonstrate and difficult to prove, or the hedonic damages. In New Jersey, in our jurisdiction, or where we operate, the case is Green versus Bittner, and that case talks about companionship, advice, and counsel, and those types of damages that are a little bit more difficult to prove and difficult to demonstrate. and along with that, also in death cases, the value of a person's of a lifetime, value of a person's life. Other areas that we're going to cover, hopefully we'll have time near the end, some commercial damage issues, subrogation matters, professional malpractice, and that as it specifically relates to accounting, that's our expertise, and we try. We don't try. We don't step outside of that. And then insurance claims, usually smaller claims related to building damage and that sort of thing. So how do we get started? First thing is, what do we ask for? What kind of information are we looking for? And it's not just financial information. A lot of times in cases that we're involved with, we'll get a complaint and we'll get tax returns or W-2s or something like that, and then someone will ask, what's the damage? And we ask for a lot more information to support any sort of a damage claim, regardless of whether we're working for the plaintiff or the defense. We're not just looking at financial records. We're looking at expert opinion. We're looking at related testimony, either of the plaintiff or the plaintiff's family. If it's an employment situation, we want testimony of that person's supervisor. We want anyone who has information relative to damages, and we'd like to get any exhibits that go with that testimony, or any other relevant information. And what we're trying to do is corroborate. What we want to do is take the statements or the beliefs of the person who has been damaged, and we want to try and corroborate that information as best we can with what documents are available. And sometimes we're just left with the situation where documents are not available, and we have to make assumptions, or we have to make piece together with less than perfect information our economic model, and that happens. But we need and want to try and corroborate as much information as we can. And what is critical? You'll never be wrong and you'll never be sued, as I like to say. It depends. It always depends on the specifics of the case, what type of case it is, and the specifics of what's being claimed as damages, or what's believed to be damaged, the person's damages. The type of documents that we typically ask for: tax returns, financial statements, invoices, W-2s or payroll records. All of those documents are we'll say, source documents, or the main documents that we would ask for in any sort of an economic claim, be it business tax returns or business financial statements, invoices for documentation for amounts that were actually spent, what a person actually spends or what a business actually spends for a certain item is very good evidence as to what that item costs or what it would cost to replace that item. W-2s or payroll records, sometimes we get both. It's not an unusual occurrence that W-2s and payroll records don't agree, and from that perspective, we have to try and decide or determine which ones of those records is more accurate, and it's just going to depend on what other records are available to us. But those are the types of financial records that we would ask for in almost any case. Financial statements would be much more important in a commercial damages case, but tax returns, W-2s, those types of things for an earnings loss claim. We also want expert reports to the extent that they are useful. In an earnings loss, we might have a medical or a vocational expert. And the one thing I would say about expert reports is that we want to make sure that our experts are not crossing specialties. Sometimes we see economists that also like to include a vocational opinion, or vocational experts that like to include economic opinions. Medical experts sometimes will comment on vocational items, and those can be problematic. So we want to make sure that we know what the expert is opining on and how that affects damages. In an employment situation, we would also ask for employment files. Employment files have a wealth of information regarding a person's history and regarding that person's benefits, particularly in a situation where someone's claiming, in addition to wages, lost benefits. And then we want to try and corroborate that information with any testimony that might be available to us, be it the plaintiff, be it the plaintiff's family, employers, or other people that might have relevant information related to damages. And now that I have all this stuff, what in the world do I do with it? Very good question. First thing that we do after we've gone through all the records and we've begun to do our analysis is we have to build an economic model to estimate damages. And that economic model is going to be based on whatever relevant assumptions there are regarding work life, regarding future employment, regarding a person's intentions, and we will try and build into our economic model all of the items that we think are relevant to try and estimate damages. And I know this to practicing attorneys, this may seem obvious, but you have to follow the local case law, whatever jurisdiction you're in, and it's fairly often that we see experts that apply New Jersey case law when Pennsylvania law applies. We have to make sure that we are understand the jurisdiction that we're in and we follow the relevant case law. As far as a future loss would go, you include growth if appropriate. That is certainly a jurisdiction specific thing. Pennsylvania has certain rules, and New Jersey has different rules. Discounting, again, if appropriate. Pennsylvania is a net offset state, and we'll get into that a little bit later. And then growth and discounting assumptions can make a big difference for anyone who has had a case of a young person who has a work life of several years remaining. If you have a growth rate of 2% and a discount rate of 4.5%, that 2.5% difference can make a substantial difference when you're talking about a future work life period of 25 or 30 years into the future. Those assumptions can make a substantial difference in any economic claim. We've been talking so far about earnings losses. As I said before, this is going to be probably the biggest part of this presentation. And it starts with the definition of earnings versus earning capacity. Earnings are exactly that. It's what someone has earned. It's what someone has generated in the past prior to any incident. And it is what they can actually document. Earning capacity is what someone is capable of earning based on their years of experience, their age, their general health, their education, and any number of factors, previous training, the specialty within which they work. All of those things take into account earning capacity, and there is a difference between earnings and earning capacity. Sometimes they're the same, but sometimes they're different. We often see complications with trying to determine what someone's earning capacity is with seasonal employees or migrant employees, people who work a short period of time and then move to another location or only work for certain periods of time during a year. Unemployed versus underemployed, a person who may have been unemployed coming off of one of the slowest economic times we've seen in quite a while. That person may be underemployed instead of as opposed to unemployed, and we have to try and distinguish between the two and determine what the true economic loss is for that person based on their being underemployed or unemployed. Also, we have a lot of union claims that we see where an individual works for a union and they work a certain number of hours during the year, and for a lot of our outside union people, they may not work as much as they do, may not work as much during the winter months as they do in the summer months. That all takes into account, we have to take those things into account when trying to determine an earning capacity for someone who is a union worker. In the off the books, we have testimony sometimes where someone will say, well, I made this much money, but I only reported 20% of that or half of that or some fraction of that because I was being paid off the books. And our standard response is if you can't document it, then it didn't happen. And there are other issues, as you can imagine, with earning capacity that come up from time to time, and it may have to do with a person's education, it may have to do with their background, it may have to do with the industry that they work in. These are all things that need to be considered when determining or trying to determine an economic loss. In personal injury and wrongful death claims, the first thing we would look at is a person's pre-injury earnings. That could be based on actual earnings. As some of the resources that we use, particularly a book by a Dr. Gerald Martin, says that a person's actual earnings are a good indicator of what they would have done in the future. When possible, we try to use actual historical earnings to predict what would happen in the future. But we're not always able to do that. We'll have statistical earnings cases where we have a child injury or a death case where that child may never work in their lifetime or may have some sort of a reduced capacity. With no actual earnings to use to try and project into the future, we have to use statistical earnings, and the Bureau of Labor Statistics produces annually all manner of statistics for individuals at varying levels of education, based on gender, based on race, based on age. We have age-adjusted statistics that can, we'll say, at least somewhat help us predict what someone's earnings would be as they progress through their work life. And we use these statistics to develop a model to give us an idea of what that child or what that young person might have done during their lifetime. And these damages are really theoretical damages because they are not. We tailor them as much as we can to the individual based on the statistics that we have, but since they're not based on that person's actual earnings and that person's actual educational attainment, since the child may not be done with school, it's our best guess, it's our best estimate as to what the damages would be for that child. And sometimes for a pre-injury earnings amount, we'll rely on a vocational opinion. Vocational experts can sometimes tell us what that person was capable of, what that person may have been able to generate in terms of earnings, and we'll use that vocational opinion. Sometimes we'll use that in concert with the actual earnings information that we have. And sometimes the vocational opinion is strong enough, or the information that we have is incomplete to the point where we rely on the vocational opinion specifically for an earnings amount. And while we're talking about vocational experts, just to make it very clear, it's not a medical opinion. The vocational guys that we have worked with in the past are very clear that medical people shouldn't be talking about vocational things, and vocational people shouldn't be talking about medical things. And we do see some overlap from time to time. One of the areas that goes along with a person's lost earnings are those lost fringe benefits. Again, this is another one of these things that should be obvious, but they have to actually be lost. If you are claiming medical benefits that you received along with your salary, if we review the employment file and find out that you were eligible for medical benefits but were not taking advantage of those medical benefits, then those may not be lost to you. If you weren't actually receiving the benefit before an accident or an injury, those things may not be actual lost benefits. And the best way for us to predict these or to project these are as a percentage of salary. Typically what we're looking at are medical, retirement, and then sometimes there are other benefits. There are stock ownership plans, there are disability benefits, and things like that. There are statistics. Again, the Bureau of Labor Statistics provides several different tables that we can rely on for certain types of benefits, and we try and use those if we don't have any specific information. But again, this is just like our earnings. Fringe benefits, we like to have actual records of that person as opposed to general statistics. And then if we have the actual cost of those benefits, we try and use those to the extent we can. After pre-injury earnings, we want to find out in a personal injury matter, not a wrongful death case, but in a personal injury matter, we want to find out what that person's post-injury earnings could be or might have been. Sometimes we have to rely on a medical expert to give us a disability opinion, and there what we're looking for is a statement on total versus a partial disability. If the medical folks say that he's totally disabled and can't do the job that he was doing before or she was doing before, or was only partially disabled and is limited in that way, we rely on those medical experts to help us with post-injury earnings projections. And the other key item that we look for is permanent versus temporary. In a permanent loss situation, that's exactly what that says. It's permanent. It's not going away, and the person's going to have to deal with it forever. If it is a total and permanent loss, then that's going to be a larger loss amount, and it's going to go for that person's work life. If it's a partial loss or temporary loss, those losses are going to be a little lower because the person's not totally injured, and the loss period is only a temporary period. And again, these medical experts, they can offer an opinion on disability, but not about a specific job. That's again, the vocational people that we've worked with. They don't like it when the medical people say, yeah, he can do this job or that job, or she can do this job or that job. They like the vocational stuff to be left to them. And in a post-injury earnings matter, what we're looking for is that person's return to work. When is that person able to return to work? When have they been given their medical release from their treating doctor, or if they've been released, if they've undergone an independent medical exam. And the key phrase that we look for is maximum medical improvement. If we see the phrase that person has reached maximum medical improvement, then we know that at least from a medical standpoint, that's the best that person is going to be. As I was saying earlier, and it stands to reason here, when we're talking about someone's return to work, especially if they've been fully cleared and determined to not have any disability, past earnings are the best indicator of a person's future capabilities. So we like to rely on that historical earnings amount to help us predict the future. And sometimes we have to rely on a vocational expert, again, to tell us what that person might have been able to do or would be able to do post-accident. The vocational experts are going to tell us, again, the pre versus the post. What could that person do before? What can that person do after? And a lot of times this gets into the same, whether the person can do the same job or whether this person needs retraining or additional education. Sometimes the vocational experts will say a person A cannot do this job or that job, but with a year of retraining could perform another job and make substantially the same amount of money. Those types of opinions are very useful to us when we're trying to determine someone's post-injury earnings. In the spirit of the NCAA tournament and my beloved North Carolina Tar Heels, any of you out there that know Woody Durham, the voice of the Tar Heels, is now retired. He used to say when the game was on the line, it's time to go where you go and do what you do. And that's what the vocational experts can tell us. They tell us where someone can go and what they can do, what that person is capable of, and how much they're able to generate in earnings. Some of the things in post-injury earnings that people don't think about sometimes, but are very important, is the pension amounts that someone might have available to them. Someone who decides to retire and takes an early pension versus their normal pension, I can tell you from my experience, rarely does the early pension result in less money than a normal pension. The present value calculation, if we have the documents to be able to project future pension amounts based on the pension formulas that are in that plan, we have those documents. I've yet to see an instance where a normal pension received later, a larger amount received later, results in a larger net present value than an early pension, a lesser amount received earlier. Other post-injury income items, and these, some of these fall into the collateral source. In some jurisdictions, you can't consider them at all. In some jurisdictions, like Social Security disability, you can use them. There's one jurisdiction in particular, I think, that we operate in, that you can use Social Security disability at least in the past and possibly in the future if the person is determined to be permanently disabled. But we also look at state disability. We look at private pay disability for policies that the person might have for income replacement, both short-term and long-term. And we also look at unemployment. And one of the things I say about unemployment, and it bears repeating as often as I can repeat it, when you make an application for unemployment benefits, at least in every state that I can recall, you have to make the affirmative statement that you are ready and able to go back to work. And that statement, is saying, yes, if I could find a job, I would find a job. That indicates some level of earning capacity. And we have to consider that when we look at someone's post-injury earnings. And then you have other business interests. Someone may have focused their efforts on a different business venture, and when earnings from one business went away or decreased, they may have focused on other business interests, and they may have mitigated their own earnings loss. All these are very important issues, and we have to address them as best we can to the extent that information is available to us. So we'll take a few minutes now for questions. If anyone has any questions, feel free to submit them, and I will do my level best to give you an answer. And if I can't give you a good answer, I will find someone here who can, or I will do some research and get back to you as best I can.
And before we begin the Q&A, could all the attendees please type the passcode into the Q&A widget? Our first question is, in a personal injury litigation, how would you calculate the loss of an Affordable Care Act health insurance subsidy, forcing a person into an inferior Medicaid plan, which results from a loss of income due to injury?
The Affordable Care Act has complicated several things, and I'll be the first to admit I don't understand all the intricacies of the Affordable Care Act. We're still kind of working through that ourselves. We've been asked, at least as it relates to medical costs, to project someone's future medical costs based on their coverage under the Affordable Care Act. As far as an earnings loss amount goes, we haven't been asked to do any sort of analysis of an earnings loss or benefits loss based on any coverage in the Affordable Care Act. So I'd say right now we're still working through that. I can't give you a great answer.
What are the critical factors that you rely on to determine earning capacity?
Critical factors for earning capacity, it varies for different people. I would say the ones that apply to just about everyone are education is probably the biggest one, previous training, previous work experience, your overall health, your ability to perform a certain job, if you've been trained to do that job, or if you've not been trained to do that job, or if you have some physical limitations that prevent you from doing certain things. And I'll say gender and race play a role in statistical earnings cases. Those are the primary things. Of course, there are other, we'll say, more case-specific items.
The severely injured plaintiff was a college student intending to be a fireman. How do you measure lost earnings?
A college student intending to be a fireman. Well, the first thing we would do is look at that person. We would ask for educational records to see how they were doing in school, to see if completing school was a possibility or a probability. We would also look at the entry requirements to become a fireman, and see if there were any requirements that the person had met or could meet or would meet. And then for earning capacity, we would do research on firefighters. If we could find information in the specific geographic location, we would. Otherwise, we would use a national earnings amount to try and determine that person's earnings base.
What is the name of the Bureau of Labor stat on earnings?
There are a few different statistics. The one the tables that we rely on for statistical cases come from the American Community Survey, and I can send you the specific. I can send anyone who needs it the specific website where you can go and find those statistics. But there are many different tables that show earnings on different walks of life, gender, age, race, and educational level.
Is a widow of a descendant entitled to receive damages for lost Social Security retirement benefits the descendant was receiving at the time of his death?
I'll say we have been asked to look at some of those cases, and I will say the economic loss to a widow would be limited to what that widow, normally in a death case, and we'll get into it a little bit in the second part, but you deduct personal maintenance from a decedent's earnings. That leaves you with the remainder of what is available to the estate. And that is the amount that would be available to the widow. And then from there, also if that widow got an increased Social Security amount upon the death of the spouse, we would have to consider that also.
Okay, that's all the time that we have for questions now. We will have another break for questions at the end of the presentation, so please continue.
All right, thank you. Okay, one of the more important components of earnings losses is a work life, and I stress this is not a retirement age. It includes provisions for the chances of living, the probability of participating in the workforce, and the probability of actually earning wages. The life expectancy information we get is from the Health and Human Services Department. Participation and the employment percentages. The information we use comes from the Bureau of Labor Statistics. Bureau of Labor Statistics is a fantastic resource for anybody that is looking for information for these economic claims. And I'll say that it is not optional. We're bound by AICPA rules, and the AICPA rules say that we have to consider work life for a future earnings loss. There are economists out there that we see from time to time that don't always assess earnings losses using these work-life probabilities, and what they would say is that it is the earning capacity versus the earning horizons, and the horizons is At least the way it's been explained to us, the earnings horizons is sort of a theoretical view of someone's earnings. It's what that person could earn under the most generous view of their career and their work history, and it's the largest amount or the highest amount, at least from the ones that we've seen, that someone is able to earn, and that's when you're taking a good, honest look at someone's work history. You have to take in the up years and the down years. And our view on the earning horizons is that it does not assess a person's probable earnings. If they've had several years where they've had down earnings, we have to consider that. We can't only consider the good years as much as we might like to in some cases. It's not an independent look at a person's earnings. I mentioned a few minutes ago about personal maintenance. Different jurisdictions call it different things. There's personal consumption, personal maintenance. What this is the cost of providing the necessary things to live. In Pennsylvania, the landmark case is McClinton v. White, and that is based upon what that says is it's based upon the person's station in life. So the more that person earns, the more they're likely to spend on housing, spend on food, spend on entertainment, which is in some jurisdictions is considered part of your necessity of life. Everybody wants to work, but they also want to enjoy the fruits of their labors. And we use statistics. The Consumer Expenditure Survey provides statistics based on different levels of income and different household makeup that can be used to tailor each case. If you have an individual or if you have a family, single person, or single male, single female, there are all manner of tables that we can use to try and determine what a person's personal maintenance is, so that we can take that personal maintenance off of someone's earnings in a death case to come up with that remainder that's available to the estate. I spoke earlier about household services. These are usually claims made by others, by the estate or other people in the household from someone who used to provide services before an accident or an injury, and they're no longer able to provide those services. And what we're talking about here are typical, ordinary household services, much like I'm sure everyone does during a day or a week. Cut the grass, wash dishes, cook dinner, clean up after dinner, laundry, all those things. To the extent that someone can or can't do those things before or after an injury, there's a value that is attached to those services that they were providing to the household. They're usually claimed by the estate or others in the household. It's unusual to see a claim from someone else, but we have seen a few of those. And usually what it centers on is the testimony of those people or the plaintiff, him or herself, about the amount of time spent and the type of service being performed. The publication we use is the dollar value of a day, and what that publication is used for, at least from our perspective, is to take the hours that someone says that they provided certain services, and each one of those services has a dollar value attached to them that accounts for all of the items that a person might go through during a day, including eating, including sleeping, and it accounts for all the hours in a week, and then attaches a value to those hours, and to the extent those hours are related to household services, we use those to try and calculate losses of those services into the future. Another publication we use is a healthy life expectancy, and healthy life is usually where we stop the claim for household services, because that healthy life is the point at which that person is still able to perform all those services. Unfortunately, as we all age, we're less and less able to do the things that we could do when we were younger. This healthy life expectancy tries to account for that time period. The life care costs, again, we usually have a life care plan, and we do not offer an opinion on the individual components of a life care plan. What we do is project the future growth of each one of the components. Each item in a life care plan and each different type of care has its own future growth rate, and we apply the specific growth rate to that particular type of care, and then we apply a discount rate to discount those damages back to present value. And just as we said with the earnings loss, growth and discounting assumptions can make a substantial difference in a future damage estimate, depending on the length of time. Shorter time periods, discounting and growth is not going to have as big of an impact, but the longer term plans, that growth and discounting may have a much larger impact. And this is sometimes is not as clear as this, but we're talking about the medical care as a result of the incident that is being litigated. Sometimes we'll see life care plans that include things that a person was already experiencing before. If the person was already undergoing a certain type of treatment before, and we see that in the life care plan, we have to at least notify counsel that we think there's some duplication. But sometimes those life care plans will include some things that are pre-existing. In Pennsylvania, the relevant case law and law in Pennsylvania is the MCARE. That's what governs medical malpractice damage claims, and to the extent that there's a future medical cost claim, the MCARE statutes tell us how to calculate and present those damages. The Sonlin, and apologize for the typo there, that is the Sonlin, S-O-N-L-I-N, v. Abington Hospital. That case discusses the inflation rates for medical care and how those medical inflation rates may be higher than the general inflation rate. We usually refer to this case from time to time when we talk about future life care costs and growing into some of these costs into the future. All right, we have gotten through all of our personal injury and wrongful death damage items. So we'll talk about a handful of the other types of cases that have economic damage issues. in cases that we see in our practice, and I'm sure you see it in your own practices. Another portion of our practice is in commercial damages in commercial litigation. What we see more often than not in commercial damage cases, and this could be a lost profits case, it could be unfair competition, it could be theft of some sort of proprietary information or some sort of a contractual damage claim, or even a shareholder dispute. But what we see a lot are causation issues where damages are claimed, but it's unclear as to how a certain act led directly to a loss of income or some sort of an economic damage. And I'll give a brief explanation or a brief description of a recent case. We had an issue where someone was claiming that they were damaged by someone else in their industry, and as a result of something that company did. And what they said is this company did this certain act on June 1st, and starting July 1, I noticed an immediate decrease in my sales. And we said, well, where is the link between what that person or that business did and the decrease? And they said, well, it has to have happened that way because there's no other explanation for it. And the point of that is that if you can't demonstrate the causation, then if there are likely other causes for a decrease in sales, then there are causation issues because that link is not properly established. There's a handful of methods we use in lost profits, and it's the before and after, which is the example I just gave. There's also the yardstick method, which is usually you find something that you can measure your company by, and then you compare your performance with that yardstick. And then the profit of others. You say this company made X dollars, and I want it all. And that's probably the least used one that we see in our practice. Another area that we see damage claims from time to time is in subrogation cases. This is usually a claim that's paid out from a fire or a flood, or we saw one that was actually a subrogation of a building collapse that was caused by construction, by neighboring construction. So it wasn't any sort of a natural disaster or anything, but the damages were being the parties were looking to subrogate against other third parties. It doesn't always have to be some sort of a natural disaster or an event like a fire. And it's based almost totally on the documents that support the loss. And it's one I'm currently involved with is based on invoices for amounts spent after the damage occurred, and the amount that they can support with those invoices. And if like I said earlier, if you can't support it with an invoice or some other document, then we have a hard time saying that it happened. So that leads us to professional malpractice. Again, this is only as it relates to the practice of accounting, and generally what we are doing is distinguishing between a mistake, honest to goodness mistake, and actual malpractice. And this is another one of the things that you look at and you say, well, that's pretty obvious, but the claim must violate the actual standards. It's not the standards as someone believes them to be. What we see in some cases, especially in audit cases, the audit standard says one thing, but the way that firm has been taught to do that one thing is something over and above what the standard requires. And if the action of an accounting firm doesn't violate the actual standard, then it's a hard time for us to actually say that there has been malpractice, and especially in a situation like that where you can't link those two things. And generally what we're trying to do is answer the question, what would a prudent accountant do? What we try to do is look at the facts of the case and say, okay, does it violate a standard? Okay, if it violates a standard, then it's a violation, but what would a prudent accountant do in that situation? And then the last area are just smaller insurance claims. It's usually a short-term type of event. We had one where a truck went through the front of a building, and we were trying to help determine the damages as it related to caused by the truck going through the front of the building and the delay in reopening the business. Again, it's based on the documents supporting the claim and the amounts that were actually spent related to that claim after the event occurred. All based on documents and the things that you can present that support that loss. So I thank you. We have time for some questions, and I will open the floor up to anyone that has any questions.
And could all the attendees please type the passcode into the Q&A once again? If a person has a pre-existing disability which would lower their approximate age of death and it was prior to a personal injury, does the expert lower the future earnings based on an estimate of the average age of death for the disabled person, and how?
If we have a pre-existing condition that would limit someone's life expectancy, that is something we have to consider. We don't always have it, but we normally like to have a life expectancy expert when we have life expectancy issues. Sometimes treating physicians can give us that opinion, but we have to have some guidance that tells us what that reduced life expectancy is, and to the extent we can, we adjust our earnings losses or our economic loss for that reduction.
Could you re-explain the pension at present cash value versus receiving larger pension later?
Sure. Usually with an early pension versus a normal pension, someone takes their early pension at age 60 and gets a reduced amount. Say that reduced amount is $700 a month. And I'm using made-up numbers, so bear with me. But if they were able to continue working until, say, age 65, they would get $900 a month beginning at age 65. In our experience, based on the pension formulas that we've seen in our practice, when you calculate the present value of those two annuities, beginning at 60 through someone's life expectancy and beginning at 65 through someone's life expectancy, the larger net present value, in every case that I've had to do this analysis, the early receipt of that pension results in a larger net present value. And what that means to us is when you have that issue, there is no loss or economic loss related to pension benefits, because the person is actually receiving a greater economic value, net present value, because they got it early instead of later.
Do you consider analyzing the difference between taking a smaller pension now than a larger one later, that by taking the pension now, the money the person gets by taking the pension earlier can be invested and increase in value?
We usually don't go so far as to assume that that person would invest that money because if a person is receiving that pension earlier because they can't work, normally what they're left with is that's the money that they're living off of and they're spending for their day-to-day expenses. And we don't know how much those things would be specifically. In a death case, we would use statistics, but in a case where someone is still alive, we wouldn't try and estimate their personal maintenance to see what else might be left over that they could reinvest.
Is there a cheat sheet as to what jurisdictions allow SSDI offset?
I have not seen one. We usually have to look. We usually have to look at the specific requirements in that jurisdiction, and I'll say by and large, the answer is Social Security is considered a public source benefit and is not allowed to be used as an offset. But there are jurisdictions where we have seen it used as a reduction of someone's earnings loss.
How do you determine earning capacity for an undocumented individual that is being paid under the table?
It's very difficult. It's very difficult because it relies, if it's undocumented and they're being paid, we'll say not with a check or any sort of a wage document, and they're just being paid in cash. It hinges largely on testimony, not only of the person, but of anyone that can corroborate it, and then any business records that might be able to be used to support that testimony. It's very, without an actual earnings record, it is difficult.
How much does a person's passive investment income factor into his earnings or earning capacity if the person is not working or unable to work?
Passive investment, usually we don't consider passive investment only because it is not their active occupation, and it's not something that would have changed because of an accident. If I have rental properties and someone else is managing them and I'm receiving the income stream from those properties, whether I'm injured or not, that income stream remains the same. Now, if we see substantial increases in someone's passive income, we might ask a few questions and find out if someone is spending more time or more effort or more resources on those businesses because of an inability to perform a previous occupation. In that instance, we might consider the increase in passive income in our economic loss.
Okay, that's all the time that we have for questions. We do have some additional questions, so if you wouldn't mind, Jeffrey, we will be sending those over to you.
Absolutely, absolutely. And I'll say anyone who has any questions, my email address and phone number weren't up there, but I'll say TASA, folks at TASA, Emily knows how to get in touch with me. Feel free to send me questions or anything that you have that you'd like me to take a look at, and I will do my level best to get back to you.
In addition to being your best source for testifying and consulting experts for the past 60 years, TASA also offers e-discovery and forensic solutions, free interactive webinars, cybersecurity, day-in-the-life videos, and research reports on expert witnesses, such as the Challenge History Report 2.0, the Professional Sanction Search, and the Expert Profile 360. I want to take this opportunity to thank everyone for attending, and most especially Jeffrey Willoughby for his time and effort in creating this presentation. If you would like to speak with Mr. Willoughby, or if you would like to speak with a TASA representative regarding an expert witness for a case that you are working on, please contact TASA at 1-800-523-2319. Tom Masucci, who has been sitting in on today's webinar, will be following up with you with regard to your feedback on today's presentation. Thank you all again, and have a great day, everyone. This concludes our program for today.